The stock market rallied today, but I think that's a reason that we had the sell-off in gold. So we had a sell-off in gold when we had the ceasefire with Israel and Iran, and oil prices came right back down. They had spiked up to $75 a barrel, something a little bit higher, I think, and then they collapsed back down to 65 when nothing happened. And gold got caught up in that, and I think we got a little bit more selling. But the significant thing is that both gold and platinum broke out relative to gold, and they broke out above some major resistance levels. And I think this is a bullish thing.
In today's news recap, gold's tug-of-war, America cashes out, Asia holds the line. In the West, American retail punters are folding their gold hands like it's the final round of a Vegas cash game, tapping out after a gilded run, convinced that Trump's tariff circus is just smoke, not fire. Bullion dealers are swimming in American Eagles, premiums shaved down to deli-slice levels, and sellers now paying just to offload. It's a garage sale in gold's heartland, a land where financial euphoria flows fast, but vault fees hit harder. Meanwhile, over in Asia, the tone couldn't be more different. Across China, India, and Southeast Asia, gold isn't a trade. It's trauma insurance. This isn't some Reddit-fueled moonshot. It's survival in a bar. These buyers aren't flipping. They're fortifying. Stacking gold isn't a flex. It's a family strategy written into generational DNA. The divergence is stark. Americans treat gold like a meme stock. Ride the hype, dump the bag, move on. Asians, they're loading lifeboats. When you've weathered currency collapses, coups, and IMF handshakes, a slab of metal in your drawer feels a hell of a lot more real than a brokerage app login. This is the 90-year-old tide of gold in motion, the ebb and flood between West and East. The West sets the price with institutional bravado, while the East waits with monk-like calm and gobbles up what the West discards. Prices rise, the West dishoards. Prices drop, the East reloads. It's not just a cycle, it's choreography. Don't mistake America's retail exit as gold's swan song. That's just the tide pulling back. The real move, China's physical demand up double digits. Southeast Asia posting 30% plus gains in bar and coin buying. While Western investors chase whatever's flashing green, Asia's quietly stacking. And here's the kicker. Even as U.S. retail pukes out ounces, central banks and sovereign funds are hoarding like medieval warlords. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
We had a huge breakout in silver and platinum. Platinum in particular, about 6 weeks ago, I did a podcast in which I specifically pointed out what a great buy platinum was, because platinum was under $1,000 an ounce and gold was trading over $3,000. So I pointed out that you could buy 3 ounces of gold with 3 ounces of platinum with a single ounce of gold. Now, for most of my life, platinum was more expensive than gold. So now, not only was platinum cheaper than gold, but it was so cheap that you could buy 3 ounces of platinum for 1 ounce of gold. And so I said, this is a ridiculously low price for platinum. And I specifically recommended that people call up Schiff Gold and buy some platinum. Well, yesterday, platinum traded for over $1,400 an ounce. I think it got to like $1,425. That was a 40% increase in the price of platinum just since I recommended it on this podcast about 6 weeks ago. Now, today, platinum was clobbered by $85. So it closed at $1,345-ish. So a big down day. fact, all the metals had a big down day. Silver was down about 60 cents or 75 cents, excuse me. But it closed at around 35.90. The last time I did a podcast, silver was still below 35, and 35 was major resistance. Well, we had a day between the last podcast and this one where silver was up almost $2, and it blew through 35 and went through 36. In fact, since my last podcast, silver almost traded $37 an ounce. Now, today was a big down day, 75 cents, and we closed the week just below 36. In fact, this is the lowest we've been since breaking out above 35. We closed at 35.90. Gold was also down about $60 today, closed around 32.75. The reason I believe that we had the weakness today in gold and silver, in addition to the fact that we've had a lot of strength in the stock market, and I think that's been a bit of a headwind, and that's why I think gold hasn't already made new highs, is because there's a lot of optimism now as people are moving back into these tech stocks, and so they don't feel as much of a need to have a risk-off hedge position on like gold. They're piling back into these risk assets. Was all the stories about progress on the trade front. Trump came out and said something about having a new deal with China. And look, I don't believe there's any deals going on. I mean, all the deals are is both sides agree to keep talking because they potentially might agree to come up with a deal or to agree on the terms of negotiating to come up with something, but they don't actually come up with anything because really all they're trying to negotiate is to move away from what has been imposed since Liberation Day. We're just trying to bring the tariffs back down to where they were. We're trying to get China to open up its rare earths and its batteries and the things that we really need to buy from China that they were happy to sell us until Trump started this trade war. And now all we're trying to do is get back to where we were.
In today's news recap, China opens first offshore gold vault to attract global investors. The Shanghai Gold Exchange SGE has opened its first offshore physical gold delivery vault in Hong Kong in a strategic move to broaden international participation and amplify China's expanding role in the global bullion trade. Operated by Bank of China, Hong Kong Limited, the facility represents a significant move toward integrating China's gold market with the international financial system. By offering physical settlement in a globally connected financial center, the exchange aims to increase the appeal of its yuan-denominated contracts and bolster cross-border liquidity. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, turn on notifications, and check our new Numismatics handbook. Most stackers want to get active, but swapping their metals for dollars isn't an option. There's plenty of opportunities in the overlooked numismatics world. Mastering U.S. coins, key dates, and errors pays off by multiplying your ounces and capitalizing where others aren't paying attention.
The stock market, the not the Dow Jones, but the S&P 500 and the NASDAQ are at new record highs. So all of the losses post-Liberation Day have been erased, and we are at new highs. The Dow is not quite up to a new high yet, neither is the Russell 2000, but you have the S&P 500 and the NASDAQ led higher by big tech, right? The Mag 7 stocks have come back to life, and they have led the markets to new highs. But don't be fooled, because while the U.S. stock market has been going up, the U.S. dollar has continued to go down. Not only did the dollar not regain any of its post-Liberation Day losses, but the dollar is actually even lower now than it was. The dollar index closed at a new low. In fact, it hit a new low intraday today. I think it closed just above 97 on the dollar index, about 97.3. The euro closed the day above, and the week above 117. On Liberation Day, we were about 104, if I recall. The euro is now up 13% against the dollar so far this year, and it's not quite halfway over. In fact, the dollar is having its worst first half of a year in decades. And so it's been a long, long time since the dollar has been this weak. That is very significant, especially, and I'm going to get to Powell and the Fed in a moment, but that's especially true when you're hoping to bring down the inflation rate. And when you're not really sure how tariffs are going to impact prices, we know that the exchange rate will. Because if the euro is 13% higher than it was when the year began, that means everything that we import from Europe is going to be 13% more expensive just on the exchange rate. Forget about the tariffs, right? Even if the tariffs weren't there, we'd be looking at 13% higher prices to buy stuff from Europe. Now, of course, the tariffs are going to be on top of that. But if you recall what guys like the Commerce Secretary, Ludstrom, or even, I think, Bessent, the Treasury Secretary, and Trump, they were all telling us that one of the reasons that we weren't going to pay the tariffs, that the world was going to pay the tariffs, was because the dollar was going to get stronger because of the tariffs. And so that would make imports cheaper, that our trading partners would eat our tariffs in the exchange rate because their currencies would go down relative to the dollar. Well, not only did that not happen, the opposite of that happened. The dollar went down, not up. And so now a weak dollar is going to augment the impact that the tariffs have, not offset it. So we're going to get a double whammy.
What do you think of Schiff's take? Do you agree with him? Are you buying more gold and silver at these prices? Or on the contrary, are you selling like most other retails? Post your honest opinion in the comments section down below and share your gold and silver price predictions with the stacker community. Now check out this next video right here because it's the perfect follow-up for you. I'll see you on the other side.